So for Meta, revenue declined 4% in the fourth quarter and 1% year over year in 2022. Net income declined by 55% in fourth quarter and 41% year over year. 22% increase in the cost and expenses in fourth quarter and 23% year over year. Average price per ad decreased by 22% in fourth quarter and 16% year over year. So even after so many negatives, Meta stock is up 22% after releasing the earnings. But why? So here are the 4 reasons because of which I believe investors are showing so much faith in Meta suddenly. So the reason number 1 is the increase in daily active users on family of apps including Instagram, Facebook, WhatsApp and Messenger. So about 2.96 billion people on average uses one of these apps every day, which is 5% increase year over year. We can say that around 37% of world population uses one of these app every day, which is phenomenal reach. One impressive thing which I found that Facebook is still growing in terms of daily active users. It is about 2 billion people on average uses Facebook every day, which is an increase of 4% year over year. And I doubt that those 2 billion people includes yourself as well. But it is definitely a big positive for Meta. The reason number 2 is Meta announced that it authorized a 40 billion increase for the stock buybacks. The company bought around 27.9 billion worth of its shares last year, and usually companies buybacks its shares when they think it is undervalued. So I feel that they could have bought some more shares in 2022 when it was trading in double digits. So the third reason is positive 2023 outlook. So Mark Zuckerberg said that our management theme for 2023 is the year of efficiency, because the lower efficiency was the main reason which caused Meta stock crash in November 2022 last year. So Meta slashed its expense guidance for 2023, saying total expenses would be 89 billions to 95 billion in 2023, which is down around 5 billion to 6 billion from its prior outlook of 94 billion to 100 billion for the year of 2023. And the company said that they would achieve this because of slower growth in payroll expenses and cost of revenue. Meta also said that it's lowering its capital expenditure estimates for the year to be in the range of 30 billion to 33 billion, down from 34 billion to 37 billion. And that is partially because Meta cancelled some of the multiple data center projects. So Meta expects revenue in the first quarter of 2023 between 26 billion and 28.5 billion dollars, where analysts were expecting revenue of 27.1 billion dollars, which is still lower compared to the first quarter of 2021, which came in at 27.9 billion dollars. So if Meta reached the high end of its guidance range, the company could report positive growth after year-over-year decline. So the reason number 4 is Meta's already lower valuation. So back in November 2022, Meta was trading at 9 multiples of its earning, and in February 2023 this year it was around 14. So if we compare that with the last 5 years of average PE for Meta, it is significantly lower, and that is because Meta's growth was negative for 2022. However, it seems that the 2023 outlook from Meta was convincing for the market to value it higher. And also Meta and Mark Zuckerberg has proven track record to navigate through the difficult times. So after the 22% jump in Meta stock price, the current PE ratio for Meta is around 18. So in my opinion, yes, the company has still a lot to prove because the revenue and net earnings were down year over year from 2021. So if I am paying 18 times the earnings, then I do expect the growth, and I know that the Meta can do it. Another positive for Meta which I see is that they are also focusing more on AI to compete with the TikTok and other short form of content. So the most important point right now is that the Meta will be able to grow its revenue and earnings this year by lowering its expenses during the economic slowdown, if there is any. Because if there will be any economic slowdown, advertising businesses will be negatively affected for sure. Thank you very much for watching this video. If you like my content, please do like, share and subscribe the channel. If you have any questions, feel free to ask me in the comment section. This video is just for an educational purposes, and please do not consider it as any recommendation.